It's almost 1 p.m. in Sydney, 11 a.m. in Hong Kong and Shanghai. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Asian equities gaining after softer than expected US jobs data revives bets that the Fed will cut rates this year. Mainland Chinese shares playing catch-up on return from holiday, while Hong Kong's rally takes a breather. Beijing's supportive policy stance could help sentiment. Also ahead, Chinese President Xi Jinping touching down in Paris to begin a three-nation European tour, aiming to boost ties even as trade tensions rise. And we've got some great interviews coming up. The CEO of Mahindra's automotive division is going to join us to talk about their EV strategy for India and the world. And later, the CEO of Indonesia's second biggest mobile telecom company, Indosat Uradu Hutchison, has more on how AI is going to change the business. First, though, let's get down to business with a check on markets. And Avril, of course, China back trading after a pretty decent long weekend and seems to be playing a bit of catch-up.
Yeah, mainland markets are in catch-up mode. That is one of the focuses for the Asia-Pacific today. But we're also keeping a close eye to the Asia market reaction to that softer-than-expected U.S. payrolls number that's reviving those bets that we'll see the Fed cut rates this year. Certainly some are pricing in September. We saw how Treasuries rallied last Friday and the dollar experienced its worst week in more than a month. So there is that follow-through in the Asia-Pacific today. Although that being said, on dollar-yen, despite the initial reprieve, it looks like investors' focus now shifting back to that yawning interest rate differential and dollar-yen moving back to the 154 handle. Now, as you mentioned, it's really about that catch-up for the mainlands. Although Hong Kong stocks are flat, this is the mainland market investors' first chance to react to a mostly positive outcome from the Politburo meeting. Pro-growth message, signals of fiscal monetary support that policymakers will explore new ways to fix the housing crisis. We saw the CSI 300 climb as much as 1.6%. But let's flip the board and take a closer look at what we're seeing in the FX space. We did get the PBOC today providing some support for the yuan with its fix, and that was the lowest since the middle of April. But if you take a look at this, the catch-up that we saw on onshore yuan actually not fully embracing what we saw on offshore yuan. Onshore yuan started the day about 720 now, moving back towards 721 for the trajectory of the currency. I think it's all going to be highly dependent on what we see on dollar-yen. Let's flip the board, take a look at what we're seeing in equities as well, because we've been keeping a close watch on the equity risk premium for the MSCI China, and that's been widening versus its other peers. Here really making a more compelling case perhaps for Chinese equities. We've seen how these earnings have been coming in more resilient and, of course, reacting also to what we get out of that Politburo meeting. Paul.
All right, thanks very much, Avril. Well, let's get more with on markets with our first guest, Suresh Tantia, APAC strategist at UBS Wealth Management. Suresh, thanks for joining us. I just want to get your thoughts on that rally that we're seeing in mainland Chinese stocks, trading higher after coming back from that extended weekend. How sustainable do you think this rally is?
Given the recent economic data and also the policy support we are seeing from authorities. But the problem is that the underlying issue with the property market is unlikely to be resolved anytime soon. So it's very difficult to see a major bull market in the China equity market from current levels. We are expecting more of a range-bound market in the next few months and focus more on the selective and defensive stocks in the SOEs and banking sector, which pay very healthy dividend yield.
Avril brought up a chart a moment ago about the risk premium that China attracts at the moment. I mean, you obviously won't be able to see it, but I'll describe it to you. But unsurprisingly, China attracts a much higher risk premium than other Asian markets. So it's cheap for a reason. Do you have any sense of caution if you are dipping back into Chinese markets?
I don't think that risk premium is going to go away anytime soon because investors are still worried about the structural growth slowdown in the Chinese economy. On top of that, we have U.S. elections coming up in November. So there would be some sort of risk premium priced into the market because of this geopolitical risk. Cyclically, yes, you could see a bit of rally, risk premium coming down, but because of these issues, I don't think we are going to see a major repricing of the risk premium or a major rally in the market.
Do you anticipate anything meaningful from the Politburo in the coming months?
I think it's going to be a continuation of what we have heard in the past meetings, that China is going to target 5% GDP growth, focus more on the economic recovery. But we would be looking more for details on how China is going to achieve that growth target. If there is no detail on that, then I think market could be disappointed.
I want to talk about a couple of the other markets that I know you're favouring, particularly Japan, Indonesia as well, which of course has first quarter GDP out a bit later. I might get your thoughts on that as well. But what are you focusing on in those two markets?
So within Japan, we are focusing more on the banking sector because I think given the weakness in yen, it's quite likely that Bank of Japan will hike rates again, could be in the month of July. And if that happens, banking sector will again see a re-rating. And that's the place to be right now in the Japanese equity market. On Indonesia, it's more of a cousin of India, which has done very well in the recent months and quarters. But Indonesia offers equity market exposure at a much cheaper valuation. So if the economy continues to grow at 5%, given the attractive valuation, I think we could see some interest from foreign investors.
In terms of Japan, we strongly suspect that we saw a bit of intervention last week. Of course, it's a long weekend for Japan as well, the market on holiday today. Do you anticipate that we might see any more action from the Ministry of Finance and the Bank of Japan? Or do you think that's mission complete for now as a floor under the yen at 153?
I think the Bank of Japan and the Ministry of Finance, they are trying to curb volatility in the yen market, not necessarily trying to influence the price level. We might see some further action if yen moves above 155, but the bigger driver for yen at the moment is the U.S. bond yield. And now with the softness in the U.S. labor market, bond yields are likely to come down, and that should provide support to the yen. So we see currency falling below 150 in the next few months and quarters.
Yeah, what's your allocation to bonds at the moment and haven assets more broadly?
So we have a positive view on the fixed income market. It remains our most preferred asset class. And with the softness in the labor market that we have seen with the data on Friday, it provides sort of a catalyst for investors who missed the rally in Q4 last year to again take exposure to the fixed income market. Especially look at the investment grade bonds with medium duration, 5 to 7 years. I think that provides a very good opportunity. We could see double-digit return for the IG bonds in the next 1 year. On the other asset classes, I think certainly gold provides a good opportunity. It went up to 2,400. Now we have seen a bit of pullback. So clients with the exposure, with looking to diversify their portfolio for the next 1 year or so, at 2,300, 2,280 provides a very good entry opportunity. We are looking at gold going back to 2,500 in the next few months and quarters.
All right, Suresh Tantia from UBS Wealth Management, thank you so much for joining us with your insights. Coming up later on this hour, we're going to get to our exclusive interview with the CEO of Indonesia's second largest mobile telecoms business, Indosat. And we discuss what's next for the company after they posted strong first quarter results. We'll also be heading back to the BNP Paribas EV conference in Hong Kong with our Chief North Asia correspondent, Stephen Engel, and an exclusive interview there as well. Steve.
Hey, Paul, of course, we've been focusing a lot on the EV space in China. They are the biggest EV market, obviously, and they are exporting and have big export ambitions. China does. But what about India? Did you know India is the world's third largest auto market, but only a fraction of the passenger cars that are sold there are EVs. In fact, according to Bloomberg economists, it's about 2.3% of passenger sales are EVs. But our next guest coming up at the bottom of the hour is the CEO of the automobile division of Mahindra. And Mahindra, they have an aggressive EV strategy. We're going to find out all those details coming up in just a little bit as we continue our coverage here from the BNP EV and Mobility Conference here in Hong Kong. Paul?
Chicago Fed President Austin Goolsbee says the latest US jobs report gives him comfort that the economy isn't overheating. When it comes to possible rate cuts this year, though, he says he still needs to see more data confirming inflation is under control.
175,000 is a very solid report. Some of the root of our frictions here might be there's a kind of a day trader's timetable and there's an economic timetable. For setting monetary policy, of course, you got to take a longer arc view on inflation, on employment, and we're just trying to figure out, after the excellent dual mandate performance of 2023, let's call it, where inflation fell almost as much as it has fallen on record and did so without a recession. How much can we continue that into 2024? We hit a bump for sure at the start of the year on the inflation front, and now everybody's just got to take a step back and try to figure out, is that a sign that the economy's overheating, or is that a sign of some other thing? The more jobs reports you get like this, where they're solid, but it's clearly moving back into something that looks like pre-COVID and conventional times, the more confident we can be that the economy's not overheating. But we just gotta watch this.
You are one of the I don't want to use the word dovish, but more optimistic people about the possibility that rates could be cut this year. How do you feel now? We do see this slowdown. The ISM numbers show slowdowns. Spending numbers were lower than anticipated and lower than in the last quarter. Are we setting up to go back to the idea that rate cuts are going to happen this year?
I don't like committing, tying our hands even for the next meeting, much less when it comes to the fall and going into next year. I will say I was optimistic in 2023 that we could hit what I was calling the golden path, that there were reasons why, in an unprecedented way, we potentially could get inflation down significantly without having a big recession, which previous to 2023, that really doesn't happen. We did that in 23. As we're looking in 24, like I said, we clearly hit a bump at the start of this year, and we've just got to get comfort that it's not a sign of a re-acceleration of the economy.
Chicago Fed President Austin Goolsbee there speaking with our colleague Mike McKee. Well, let's take a look at how US futures are looking after that. Well, a lot of people are calling it a Goldilocks jobs report. We're very narrowly in positive territory, only by a few points though. So let's see what happens when we kick off the new trading week in the US in a few hours' time. But for more on markets in the meantime, we're joined by Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams. Gina, always a pleasure. I just want to start off with some of those remarks from Austin Goolsbee. Well, he's consistent if nothing else, data dependent. We also heard from John Williams saying inflation is heading lower, but I guess the key question is when. Why is inflation proving so sticky?
Yeah, it's a great question, and I do think that, you know, as much as the monetary policy professionals want to take a victory lap, what happened in 2023 was also the cure for inflation and was inflation itself. We certainly saw in the earnings stream for the S&P 500 a tremendous downdraft in late 2022, early 2023, reflecting the spike in prices that emerged in late 2021 and into 2022. Now we're seeing the benefits of that lower inflation as companies themselves adjusted, companies themselves pulled back, created an earnings recession to help moderate that inflation. They're now benefiting from the deceleration in inflation right now, quite frankly, and that's creating an upwave in earnings. So there's, monetary policy is one thing, but what's also happening in the real economy is making a big difference for corporates in the States. I do think that in general, inflation volatility is still a little bit higher than many companies would like to see, and we see that reflected in spending plans. They're pretty careful with where they're going to deploy their capital, really thinking about productivity enhancing sort of AI-based spending as an area of opportunity to help mitigate the impacts of this volatile inflation landscape right now.
Yeah, AI has proved to be a very powerful catalyst, and it seems those days of bad news being good news for markets are a long way behind us now. Are they proving that they don't need easy money to keep pushing higher?
Yeah, I think that's a really interesting point, is when money was so easy, I think we have to ask ourselves, when money was so easy without issuing on that easy money, and as money has gotten more expensive, is it having other dampening effects on corporates? And what we actually see is, even though they took advantage of the 2020 low interest rates, they've called back that debt over the course of the last 3 years. They're not issuing a whole lot more, but they're able to fund themselves in large part through cash flow generation. And we see this most profoundly with the giants within the U.S. equity markets, with the mega caps, as they're so called, the Magnificent Seven. They generally tend to produce much stronger cash flow growth. They had a lot of cash stores. They're not debt dependent. And therefore, what's happening with interest rates only has peripheral impacts on their performance. As long as they're generating cash flow through their operations, they're able to fund future investments. They're able to fund capital deployment. And we're seeing that play out real time. So monetary policy has some impacts, but it's not the end-all, be-all for U.S. corporates.
We're seeing a pretty decent rally today in Chinese markets, but perhaps understandable, playing some catch-up after that long weekend. How sustainable does this rally in Chinese equities look to you?
Well, when we came into this year, Chinese equities were tremendously oversold. You're looking at valuations that were several standard deviations below long-term average. Basically, all hope was lost for China. So I think what we're having right now is the early stages of a confidence rally and early stages of a recovery rally, really perpetuated by policy and the degree to which the policymakers in China are willing to pull those levers or push those levers in favor of greater risk tolerance. That's what's fueling the China recovery trade at this moment. That said, if we start to have real improvements in economic data and earnings trends in China, you can see another leg emerge. And I think that's what you start to look for in this earnings season and the next earnings season is, do you get some real-time results that start to confirm this renewed optimism in China, and that can fuel another leg higher? But for now, you can't ignore policy. And you've had really big policy movements in favor at a time when the markets were oversold. And that is usually the trigger for an improvement in risk tolerance. We just need some follow-through from the economy at this point.
All right, Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams there. Thanks for joining us. And still to come, we're going to stay with China because we have President Xi Jinping in Europe. He's there for the first time in 5 years. So we're going to get the latest on his goals in the region up next. This is Bloomberg. Chinese President Xi Jinping has arrived in France on a three-nation trip through Europe designed to bolster ties, even as trade tensions mount. Asia economy and government correspondent Rebecca Chun-Wilkins joins us now for more. So, Rebecca, what does a successful trip look like for Xi Jinping?
Well, I think for China, the main priority is to figure out a way to put more space between EU policy and the US policy. We have seen the European Union moving in lockstep with the US when it comes to expanding this litany of investigations and probes into state subsidies. That really kicked off in earnest last autumn when we saw the EU roll out this investigation into Chinese EVs and state subsidies for that industry. That has since spread to a whole range of other clean tech industries. And it is a major sticking point from Beijing's point of view because, of course, part of their plan for economic recovery is the so-called new three growth drivers, which includes solar panels and electric vehicles. So it's a major issue for Beijing. It will be one of the top priorities, if not the top priority, for President Xi Jinping as he sits down to negotiate with Emmanuel Macron.
Some of these issues, though, do have the whiff of intractability about them. And, let's just take the tension over EV policy for a moment. I mean, France adopting policies that effectively exclude Chinese-made EVs from the market. How do you get around this problem without starting an era of trade reprisals?
It's certainly a big issue, and I think the sort of worst-case scenario here is the EU launches into some full sort of trade war situation with China with really high tariffs on, for example, EVs. So some of Beijing's policy here may be more about moderation, maybe more about slowing the momentum of those probes rather than sort of trying to eliminate the risk altogether. The other element that's important to watch here is that China is also making the case that actually, engaging in trade and keeping those trade barriers down ultimately creates economic rewards for European countries. So look at, for example, the several cases of Chinese EV companies going to European nations to set up their own factories. We had the automaker Chery opening a factory using an old Nissan factory in Spain. We also have this promise for BYD to open a factory in Hungary. That's alongside two other potential automaker factory deals. All of this, of course, creates jobs. It helps the local economy. And it's part of the case that Beijing is trying to make, that if you continue to sort of do business with China, they will help. They can help boost. And it's actually not advantageous to individual markets within the EU to roll out these broad-based EU restrictions.
All right, Asia economy and government reporter Rebecca Chung-Wilkins there. All right, let's take a look at some of the stocks that we're tracking on markets at the moment. Let's have a look at some of the Apple suppliers that are currently trading. We've got a pretty good day happening here as well. And of course, it has been a good week for Hong Kong tech stocks also. But we've got Hon Hai right now, better by more than 6%. Taiwan Semiconductor, TSMC, also better by 1.25%. We take a look at AAC Technologies there, also in positive territory. Okay, what have we got coming up? We'll take a look at global movers at the moment. Let's see what we have here. Yeah, again, a lot of green on the screen. We do have, of course, China is returning from a long weekend. Japan and Korea are currently on a public holiday, so no trade there. But the MSCI indexes that are tracking all in firmly positive territory at the moment. Still to come, we are going to go back live to the BNP Paribas Global EV and Mobility Conference in Hong Kong. The CEO of Mahindra Mahindra's automotive division is going to be joining us for an exclusive interview next. This is Bloomberg. Welcome back. Let's check in on how markets are faring with Avril Hong in Singapore. Avril, what do you got?
Yeah, Paul, we're taking a look at the mainland markets as they actually go into the lunch break, but they've been reacting today a lot to do with the policy outcome from the Politburo meeting, mostly read as a positive sign, pro-growth, those signals of fiscal, monetary support, and also the policymakers seem to be exploring more ways to support the real estate sector. So all in, there is a rebound in the mainland stocks, but we also have the MSCI China running a little higher compared to what we saw at the later parts of last week. It's not as pronounced, but the other thing that we've been watching out for as well is how this bull case for Chinese equities appears to be even more compelling, especially if you take a look at the equities risk premium that's been widening versus some of the other peers. Let's take a look at what we're seeing on the yuan as well, because of course it was that offshore currency that was enjoying quite a fair bit of a rebound last week thanks to the Fed in play. But onshore today, we're not seeing that catch up that pronounced. We did start the day on dollar China at around 720, now hovering towards the 722. Let's also take a look at the Indian rupee as trading begins. Yesterday, last week for that matter, we actually saw more or less declines, but we're seeing perhaps what we're seeing from the Federal Reserve being digested by the markets. It was, after all, against the backdrop of that softer than expected payrolls data and investors really shifting their bets that maybe this year we will see a cut from the Fed. Dollar rupee hovering at 83.43 for the moment. Paul.
All right, thanks very much, Avril. Well, BNP Paribas is holding its second annual Global Electric Vehicle and Mobility Conference in Hong Kong, and it brings together influential industry figures and market-leading analysts to discuss the future of EVs. So let's get over to the event now, where our Chief North Asia correspondent, Stephen Engel, is standing by with our next guest. Steve.
Yeah, that's right, Paul. Our next guest is Nal Golagunta. He is the CEO of the automotive division of Mahindra Mahindra from India. You just flew in from Mumbai for this conference, and then you go back because you have a lot on your plate. You've been in the job for a year. You have an aggressive EV strategy, but the EV market in India is not developed at all. I think about 2.3% of all passenger cars sold in India right now are EVs, which is non-existent, really, compared to our neighbor to the north here, China. So what is your next step in getting that first SUV EV to the market?
Yeah, Steve, like you said, it's early days for us in the EV market in India, and it's been just 2-3 years when we have really good cars come out there. We launched our car about 4-5 quarters ago, and we're already almost 10% of the market at this point in time. But really, these are mainstream EVs that we have, and our view is that we need to take our traditional DNA of making strong, authentic SUVs to the EV space, and that's why we announced 5 new EVs. 3 of them would be coming out in about a year or so, and these are what I would call unapologetic SUVs, which happen to be EVs, lifestyle vehicles full of technology and full of features which customers want without the range anxiety with the batteries that we're putting in there as well.
You've built a plant in Western India. They're already starting to crank them out?
That's right. About 220 days in record time, we put out a factory. It can churn out 200,000 vehicles in a year. And we rolled out our first set of vehicles about 3 months ago.
How are you going to get to what I've heard the target is by 2027? You want about 20 to 30% of your output to be EVs. Is that attainable?
Yeah, no, absolutely. We are quite optimistic about that goal. And what gives us confidence is, if you see our portfolio even today, we make cars in the mid to upper end of the price segment in the market. And even with that, we are the number one SUV player from a revenue perspective in the past 3 quarters, if you look at it. And from a volume as well, we are number 2. So we are quite optimistic that we can take the same excitement we see in our ICE SUV products into the EV range.
Yeah. How about your local supply chain for batteries? I know you have a venture with Volkswagen, but my understanding it's not necessarily classified as localization. And I know your competitors like Tata and Mahindra Suzuki, they are building some of the battery plants in India, but we haven't heard the similar kind of plans for you. How are you going to bring down the costs and to streamline your battery supply chain so you can keep those costs low?
Yeah. Most of the localization which have happened so far is largely around battery assemblies, not necessarily at a fundamental level making the battery units themselves. And we have our own assembly plant, came up along with the factory as well. So I think the next level localization has to happen on a more fundamental level. And our partnership with Volkswagen and other players is much more of a holistic partnership over a longer period of time. And we are hoping that over a period of time we can bring true localization into the market on sales as well.
How do you see that partnership growing? I know Volkswagen is also trying to sell its own cars, EVs, into India. Can there be the joint car from Volkswagen and Mahindra?
Yeah, so very early days to talk about anything beyond the components that we have agreement with Volkswagen at this point in time. But we are definitely looking at them as a very strategic partner for us in the long term to come.
You're also getting other strategic investment from the likes of Temasek and the like. What are their expectations for the Indian market since you're in such early days right now?
Yeah, so the investors that we're getting in like Temasek, BII, these are all recognition of the excitement in the market at this point in time and the credibility that Mahindra has with their SUV portfolio out there. And they were all convinced with the EV strategy that we've put out, and they've seen the development we've had with the early products that we are driving right now, the test runs which are running. And so it's a reflection of the strategy we have.
What's your biggest challenge though?
At this point in time, the category itself is in early days, and so forming the momentum for the category is where we're all working on, the whole industry at this point in time, and the government is stepping in as well. So that's really where it is. It's in early stages in the category, and the strength of the portfolio will show up in a year.
What do you make of a company like Tesla that Elon Musk was supposed to go there a couple of weeks ago? Right. He canceled. He diverted to China and had his big announcement that they're going to get full self-driving FSD system with Baidu approved in China. They are obviously much further along, and he's talked about he wants to invest a lot into the India market, and India also has relaxed some of the import duties that were in place as long as they invest. What does a big player like that, and potentially Chinese players as well coming into the market, how do you compete against that are already well developed?
Yeah, so firstly, it's the third largest market in the world. And it's
passenger auto market.
That's right, and the market's growing quite fast. The UV segment grew 27% last year, so it's natural that people want to come in. And for us, competition is welcome. We have confidence in the portfolio that we have at this point in time. We actually think global competitors coming in should bring in a lot of credibility for the segment. Like I said, it's early days in the EV segment, so it should get excitement and credibility to the segment, and that I'm hoping will help us grow the category. So welcome to have some competition coming in.
Now, the 5 EVs that you're planning are all SUVs, as you've said.
Right.
Can you electrify? What are your plans to electrify more of your fleet? And how much funds do you need to do that?
Yeah. So at this point in time, these 5 SUVs, we're calling it the Born Electric portfolio that we have. So these are ground up developments, brand new development we have done. But over a period of time, we plan to take the rest of the portfolio, which is our ICE portfolio at this point in time, also and electrify them as well. But that will happen after these 5 SUVs come out in the next 3 years.
What kind of fundraising do you need?
So at this point in time, we are well funded. The investors who come in are strategic investors for us. They bring in expertise, they bring in best practices for us. So the CapEx plans are something we've announced in the past in the public as well, but we are well funded for the plans we have.
And when you mentioned that the new one next year sometime, when do you expect you're up to scale? I mean, what time frame are we talking about? China's gone from 0 to 60 on their scalability pretty quickly. Do you have the same capability, or is there infrastructure issues still?
No, I don't see there's infrastructure issues at this point in time. The capacity that we've built up has some fungibility if the volume scales up as well at this point in time. So we're not concerned about any infrastructure challenges.
Supply chain challenges, everyone has that, raw materials and everything. How do you overcome those?
Yeah, so I think if there's anything we have learned from COVID is to be very strategic about our supply chain in general, and specifically about certain components like semiconductors and batteries. So over the last 3 years, we have learned a lot in terms of how to have very strategic partnerships with these players, have dialogues to secure the supply we need. So based on those learnings, I think we're quite confident that we'll be able to weather through any supply chain disruptions which might come up.
Now, you haven't opened up the order book yet for your SUVs.
That's right.
But can you give me an indication of what is a realistic total sale by the first year, say?
Again, very hard to say when the hockey stick will start to play out at this point in time. But what we have is a plant which can churn out 200,000 per year. But fungibly, we can take it up if we need to.
Yeah. All right. Now, thanks so much for coming all the way from Mumbai and talking to Bloomberg Television here at the BNP Paribas EV and Mobility Global Summit. Thanks so much.
Thank you, Steve. Thank you.
Okay. Going to send it back to you. And that's our wrap for this day one of the BNP Paribas conference. Back to you guys.
All right, terrific. Thanks very much for that, Steve. We do have plenty more coming up as well. Indonesia's second largest mobile telecoms business, Indosat, reporting a first quarter earnings beat. The company's CEO is going to join us for an exclusive interview next. This is Bloomberg. Indonesia's first quarter GDP data is due at the top of the hour. Economists think growth likely ticked up in the first quarter, lifted by domestic demand. We'll talk about that more with our next guest, who runs the country's second largest mobile telecoms business. Vikram Sinha, President, Director and CEO of Indosat, Uridu Hutchison, joining us now exclusively. Mr. Sinha, thank you so much for your time. I might get your thoughts on Indonesia's macro growth picture in a moment, but first I just want to talk about your plans. What sort of strategic investments do you have planned for infrastructure coming up?
So, we have been consistently investing anywhere between 800 to 900 million US dollar. I think the key thing is last 2 years, 60% of that we are putting it in rural. We want to make sure we are able to help Indonesia unlock the full potential of rural opportunity. And that, when I say so, especially all the villages, where we are ensuring that the quality of internet, at least, and what we have seen through well-researched data, that in next 3 to 4 years, there are close to 21 to 22 million first-time internet users, which will be coming from rural Indonesia.
Definitely a very attractive growth story for you in Indonesia. How do you propose to fund some of these developments that you're looking at? Will you be selling towers or other digital infrastructure assets?
Yeah, so we have a very strong balance sheet with very strong shareholder. We sold our tower for right reason. We wanted to be asset right and asset light both ways. We are looking at fiber. We are in the early stage, but mainly we are doing that to ensure what is best for Indosat Uridu Hutchison and also for Indonesia. So that is what our focus is at this point of time.
Do you see a lot of consolidation happening in your industry going forward? And are you looking out for any M&A opportunities yourself?
Yeah, to your first point, we have seen across the region and across the world that telco is a scale business, and consolidation is good for the industry. So that has been the trend in Southeast Asia. We started with Indosat, Thailand, Malaysia, and I think there are more opportunities in Indonesia itself. When it comes to Indosat Uridu Hutchison, we acquired MNC customer. We did it end of last year. The good news is we had the integration engine already ready with us, and we have been able to integrate that, especially on the area space of FTTH and home broadband. We will look at inorganic opportunities. There are a lot of small operator, and we believe this business needs scale. But we are not in a rush. We'll make sure that we do proper due diligence before deciding on anything.
Yeah, so are there still some goals from that merger with Uridu and Hutchison 3 Indonesia that you still need to realize? What are the synergies that you're still looking at?
Yes, when we started this journey, I remember talking to Bloomberg, and the question was, whether it will be 300 or 400 million US dollar, whether it will be in 3 year or 5 year. I'm happy to share with you that in 26 months, we have already clocked 400 million US dollar of recurring synergy. The network piece is more or less done. Now we are looking at more on IT and some of the other tail, but overall our both from synergy value, we have already, as I said, crossed 400 million US dollar. But the good news is, our number one promise that we'll be able to deliver better experience to our customer. You can see that, from all the third-party reports, and also we are hearing the same from our 100 million customers.
Well, you have some competition on the way as well in the form of Elon Musk's Starlink satellite network. It's due to start operations in Indonesia. Obviously also very effective at reaching those unreached pockets of the market. How concerned are you about this competition, and are you doing anything to retain your market share?
I think this is my personal view. I don't see this as a competition. In fact, all these LEO satellite will help us connect the unconnected, and I see more as a collaboration. So I've been talking about this. I don't see this as a competition at all. The unit economics for such services at the price and at what level we work doesn't make sense, A. B, I think the key thing here is how do some of these technology help us connect the unconnected, how it can work and cooperate with us on our backhauling, transport. That will be the real benefit for the country, and also a good collaboration story.
Well, in terms of collaborations, you've also got a tie-up happening with NVIDIA to become NVIDIA's cloud provider partner. How do you see the broader AI story unfolding in Indonesia?
I think this is very interesting. We are getting a lot of support from NVIDIA. Indosat is a very iconic brand, and we wanted to make sure that Indonesia is on the forefront, and our first set of GPUs will be in the country June itself, and we are seeing a lot of interest and demand. I think the key learning here is the ability to parallelly invest on human capital for us to ensure that we get the full benefit of this AI journey. We want to work with our partner not only to get the technology, how we are able to put the investment on human capital, getting the AI talent, Gen AI talent, and NVIDIA and some of the other partners are working. And at Indosat level also, we want to make sure that every dollar we invest on technology, we support it with a dollar investment on people and capability development for Indonesia.
We're nearly out of time, but before I let you go, I do want to get your views on Indonesian GDP. We're expecting to see a modest tick up for the first quarter, but what's your outlook for the rest of this year for Indonesia's growth story?
Look, for Indonesia, if you look at last 5 years, 5% is given. And I think with the election behind us, and the theme is continuity and which Indonesia need on policies, I think we are heading towards 5.5, and 6 will be a matter of time. Indonesia has the potential to grow at a level of 6, 7, and I think that trend has started.
All right, Vikram Sinha from Indosat, Ooredoo and Hutchison, thank you so much for joining us. As you might have seen on the screen there while Vikram was speaking, the Indian markets have opened. So let's have a look at how we are tracking for Indian stocks at the moment. The broader index doing pretty well, but we're focusing on one stock in particular, and that is Kotak Mahindra Bank. We did have the stock upgraded by JP Morgan and other analysts as well. The company reporting better than expected earnings for the fiscal fourth quarter. We have India's fourth largest lender reporting those earnings on Saturday, and it did beat estimates. The CEO, Ashok Vaswani, says the lender is going to focus on cross-selling its products to existing customers until an RBI ban over online platforms is lifted. The shares have taken a hit since the regulator banned Kotak last month from adding new online customers and issuing credit cards, but we got the stock up about 3.75% right now in the early going. Okay, still to come, we've got another exclusive interview, this time with the Liv Golf CEO, Greg Norman. Hear more about their plans to expand in Asia next. This is Bloomberg. Liv Golf CEO Greg Norman says several Asian countries are ready to take a big swing at the sport. He was speaking exclusively with Bloomberg's Haslinda Amin on the sidelines of the Liv Golf tournament in Singapore.
I'm a huge fan of Asia, always have been for 40 years. I actually see, I've gotten calls, I was just in Manila, so the Philippines are very keen to get us there. Golf in the Philippines is doing very well. You probably know this better than I do, but they've got a 7.3% GDP. Incredible what the Philippines is doing. So they want to invest into what is the best thing to bring in. We're not just sport, we're sports, entertainment, and culture. The excitement that we're getting on a global basis, just in Manila, they want us to do that in Manila with one of their golf courses. Tokyo next week. Tokyo wants it. Korea wants us. China wants us. Malaysia, I had dinner with somebody last night. He just, a very influential person from Malaysia said, we need help bringing golf to Malaysia or back to Malaysia. Happy to do it. We did it in Vietnam in such a successful fashion.
And you can see the full interview with Greg Norman on Liv Golf and its expansion plans in the next edition of Latitude with Haslinda Amin, and that airs in June. Let's get to some of the corporate stories that we're following. Qantas has agreed to pay a fine of 100 million Australian dollars and compensate customers over claims that the airline sold tickets on thousands of flights that it had already decided to cancel. The agreement with Australia's competition watchdog also includes a remediation program expected to cost about $20 million. Payments to affected customers will range from about $225 to $450. On High's strong growth in April sales is helping boost expectations for iPhone sales. The company, also known as Foxconn, assembles most of Apple's smartphones and posted a 19% jump in monthly sales from a year ago. Foxconn's revenue rose to a record for the month as it diversifies its business to focus on equipment tied to AI. Bloomberg has learned that CICC is planning to demote some of its senior bankers and cut their pay. The unusual move could lead to voluntary departures from one of the country's largest investment banks. Sources say CICC has told staff internally that some individuals could lose their managing director titles and be relegated to lower ranks under a new performance rating system. Okay, let's take a look at what's moving on markets at the moment. We are watching Chinese EV makers. Li Auto, beg your pardon, has seen volume to rise to more than triple its 20-day average. Trading briefly touched 12.6 million shares. We see Li Auto rising pretty strongly in Hong Kong at the moment, about 6.5% right now. Geely Auto is one that we're watching as well. A little bit of softness there. Zeekr Intelligent Technologies holding as the high-end electric brand car behind Geely. It's seeking to raise up to $367 million in a U.S. public offering. Japan, of course, closed today, so the MSCI Asia Pacific ex-Japan rising pretty modestly at the moment, better by about 2/3%. And that is it from Bloomberg Markets Asia. Our new show, Horizons Middle East and Africa, coming up next. This is Bloomberg.